Welcome back for another Fetch AI price prediction analysis, and in this video I will be giving you areas that Fetch AI needs to continue holding above in the next coming hours for us to continue expecting higher prices, and also give you my pullback target areas in case we continue seeing further weakness on the charts. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Fetch AI is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We also continue to hold above the $0.3 mark, which is also a significant area of support. And as long as you continue holding above it, I'm still expecting higher prices. Fetch AI continues to obey the Elliot structures also. And zooming out on the charts, you can see that after getting our low on the 18th of October, that is the 16th of August, we saw this massive push to the upper side in a move that I'm terming as the formation of this wave 1. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2 into the minimum target area highlighted on the charts using this blue target area, which is an area that we have now fully maximized, and there are high chances that we now have a low in place for the second wave. And whatever we are seeing at the moment is the start of an impulsive move in the formation of this wave 3. And in my previous videos, I have been giving you target areas for the third wave by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at around the $0.3846 mark, which is a target area that we have now fully maximized. And what that means is that there are high chances that we now have a high in place for this wave 3, and maybe in the next coming hours we might see a bit of a pullback on the charts in a retracement move in the formation of this wave 4. And if that is the case, then using the Fibonacci's, connecting the fibs from the low of the second wave to that high of that wave 3, then I get a minimum target area for the fourth wave between the fib level 0.382 and the fib level 0.5, and I can mark that target area here on the charts between the $0.3175 mark and the $0.295 mark. And what that means is that there are high chances that in the next coming hours, Fetch AI might give us a bit of a retracement into this blue target area, give us a low in the formation of this wave 5, then see a reaction of the target area and continue getting impulsive in the formation of that wave 5 to the upper side, breaking above the $0.4 mark. That is the first possible scenario that we need to have in mind. Alternatively, there are also chances that we can see a reversal from the prices that we are trading within, given that we are still holding above the 20-day MA on the 4-hour chart, break above the $0.39 mark, which is the significant high in the formation of this wave 3, and get above the $0.4 mark and maybe continue gearing up. And in case such a movement plays out, then I will still be terming that as the formation of that wave 3, and soon I will be expecting another pullback in the formation of that wave 5, that is the wave 4, before we can continue getting impulsive in the formation of that wave 5. So those are the two possible scenarios that we need to have in mind, having the most likely one as the one where we have a high in place for the third wave, and in the next coming hours we can expect a retracement to the 0.31 and the $0.295 mark in the formation of that wave 5 before we can see another push to the upper side in the formation of that wave 5. Zooming out on the charts to also give you my long-term Elliot wave analysis and give you what we can expect once the bull market starts, you can see that back in 2022, Fetch AI gave us a low at around the $0.0525 mark before we saw that massive push to the upside in a 5-wave structure giving us a high above the $0.61 mark. And after getting that high, we started a corrective structure in the formation of this wave 2 into the minimum target area highlighted on the charts using this red target area, which is an area that we have now fully maximized, and there are high chances that we now have a low in place for the second wave. And in the next coming weeks or maybe months, we can continue seeing a reaction of these and get even more impulsive in the formation of this wave 3. And the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $1 mark. And that is the minimum that we can expect Fetch AI to do in the formation of that wave 3 once the bull market is here. And I hope that video was of much help to you.